Right, everyone. So, well, today's a Sunday, so Sunday afternoon around 3:30 p.m. I am looking at the Forex timetable for next week. Okay. Now the time here. This timetable basically I get it from Forex Factory. There are many places you can get it from. But basically, when I look at this, I thought I'd share a little bit more about timing, about trading around the news, around the news timing. Now, basically, I don't really look at stats like that, right? I see people look at all these stats and, if it's positive, if it's negative, they go to trade in a certain direction. I can tell you the minute anybody says that, he's probably not a very good trader. I know it sounds kind of sucky to say that, but honestly, if all you needed to do was to get a positive number, a negative number, and then trade according to that number, well, test it. See whether it actually is consistent enough to make money. In my experience, it's not consistent enough. All right. But what is actually important when looking at this one is to look at when the news is going to come out. Right. So Tuesday, this is all Singapore time, right? Tuesday, Wednesday, Thursday, Friday. All this timing is basically, if I can just show it here. See here, I said it's Singapore time. So if you're from the States or from UK or somewhere over the other side of the world, then you can set this according to your own time, right? Okay, so basically, when I look at this Tuesday at 1 a.m., that's going to be Monday night. Fed Chair Powell speaks. I'm sorry if I pronounced that wrong. And then the other one at 12:10 p.m., which should be Singapore afternoon. Bank of England Governor Carney speaks. Okay, so this one probably I'll be asleep though. So let's just have a quick look at the DAX. Now, stuff like that, actually, I wouldn't worry too much about getting into these kind of trades. But this one I'll be interested in though. Okay, so let's go look at a pound dollar. Okay, so let's say I'm interested in pound dollar. But what I hope is that at least when I'll just cut this guy when this gentleman is speaking, this gentleman is speaking. Well, you say something, if he may influence the dollar a little bit, and then after that, maybe it spikes. Price action might spike in some direction, and then it's going to retrace. And then when another person speaks, then maybe that would push the price action in a certain direction. Who knows? But anyway, what I'm actually looking for is I already have it here. I like pound dollar to the upside, basically. All right. Pound dollar to the upside, and I mean even without looking at any of these news, I still like pound dollar to the upside, even without looking at it. It's just a matter of timing, and timing is so important because you don't want to put in trades on Monday, right? Because it could spend price action. Let's say if I'm looking at pound dollar, price action could spend the entire Monday price action could be doing this as well. You see, just to make one more drop like that, then you're gonna get a trend line that goes this way. And then when everyone thinks this is the sell, on Monday, if this one happens to drop, all right, and this one happens, and everyone see this break here, maybe candle closed here, maybe a candle closed here like so, and then everyone thought, oh, candle closed below, this is going down, and then what happens? Then this one flips up. Now on Tuesday is Tuesday here, around maybe, and this is 12:10 Singapore time. That means around London session. This one, this price action here, could then pop up like that, and then after that it starts to make a sideways. Then that makes a good buy to go and break this top, and then everyone here will get caught basically. All right. So to me, that is something to do with timing. So now if you ask me, do I actually look at this? Well, I don't really have to look at it. It's like a confirmation, but when you look at this chart, you kind of more or less know an educated guess roughly what it can do. Like now that I'm looking at this side, this is exactly what I mean. See that? So see that? You see the similarities? Whether or not the timing is there, well, after that, what happens? So this one went below. You have people say it closed below, it must be going down. Or maybe they say it retraces the trade too. It retraces the trade too, then then it's going down, but not so. Just because it closed below in this case, see, it went up also. So it really depends on the context of the entire structure, how far it's pushed. Is there something on the left side that's, let's say this is actually the last push, you should not take this, even though it closed below, right? So in this case, this is a good example that you have to be careful. You know, if you put the idea of timing into your trades, then you know that this is potentially what it can do. Using you know, the timing of news or to make these pushes to put people on the wrong side. So, but essentially, I would say pound dollar, I still like it to the upside. I do like it to the upside. Now this move down is always right. It's could this be going up straight? Possible too, you know. No, there are a lot of possible moves on this one, which is what people don't like to hear. But you know, the thing about swing trades, it's never that clear cut. And to actually be able to take moves like this and up, you actually need to know how to intraday trade all these things. You see these candles, so you need to know how to trade within these candles. It means being very good on the lower time frames, right? So, right. So now, even though I've drawn this, but you should know how to navigate stuff like this in order to take that, right? Because don't forget, this can also do what? If you take a buy here, it can also drop there, you see? And then this is the one that goes up instead. So know how to navigate this, even though we're looking for the upside in general, you need to know how to navigate to get these two pieces basically, right? And of course, in the worst case scenario, if how to say, let's say this does that, right? And then so someone said, "Oh, Sherman, you said this, it's going up." Yes, it's going up, but what if it does not go up that way and it goes up this way? Then this can still come down to around this level, and then this can also go up. So you understanding how price action moves and knowing what it can do and seeing how it plays out, and then moving in and out of the trades is very important when you're intraday trading. So the buy is a good idea, but just be aware of all the places where things can go wrong, because it's when things go wrong that people lose money. All right. So what makes a good buy? If you don't know anything at all about trading, understand that knowing where the stop loss is important. So if this will be the most ideal place to take a buy, right? Because most ideal place. If it's anywhere here, understand that you can also get in, but you know how to navigate it, right? So that's for pound dollar. Then Wednesday, we got a lot of dollar stuff. The funny thing about news is that I often see news reports come out, and it's often too late. People are just reporting whatever has happened the day before. So news basically it's all too late unless you are really in the know. You know people on the inside. I don't know. I mean, people say there's no such thing as insider trading. Come on, man. It's only those people who get caught, right? There's not in the States you're not supposed to take cocaine and stuff, but people still take it, right? It's whether or not you get caught. So unless you know somebody on the inside, stuff like that, you see the report come out here, come on. It's all yesterday's news. So we got let's say we do want to trade into the news for the dollar. Basically, so if we really look at pound dollar, we're gonna look at something like let's say we look at something everybody likes, dollar cat. Let's see what dollar cat is doing. Dollar cat. from this chart, actually, from this chart pattern, dollar cat was even though. So I think I pulled this up here. Let me see. 1, 2. Oh, this move was kind of sharp though. This move was kind of sharp. Okay, so 1, 2, 3, and then it shot up this way. Does that mean that we can actually buy this one? Not so, not so, because stuff like that's always very tricky. So now you have something like this. See, something like this, right? Something like this. Let me just remove this one. If you ask me, do I want to sell this? Not really. It's tricky. At this point in time, we're going to have to see what type of credit structure this is actually making. But right now, it looks like it's making one for the upside. So basically, if you get something that goes sideways, it's already going sideways, right? It's already going sideways. It's already going sideways. So let me see. If you can get something smaller, even something like this, then go sideways again. This is a good buy for one more up like this. Because these, then you know where your stop loss. Stop loss is just below here, right? You also got to be very careful. Be sure to take the breakouts because why? This kind of stuff. This is all very, very. How to say? I think what's the word for it? Low liquidity. Is it? Well, the point is, if price action comes and breaks through this level, the problem is once it breaks through here, if it pulls back, it's going to drop all the way to this level because these candles. There's very low liquidity there, and basically, the only point of point of where the order came in, where somebody decided to buy is right here, and it shot right through. So when it comes, you're gonna cut right through all this entire move up. It's gonna cut right through, and then it's gonna settle right here at the bottom before deciding what to do. That's what price action does. Okay, so. The move we are interested in this case, right, is actually this move up. This move up. This would make for easy trading, right? Easy trading. Right. So I'm going to mention the stuff where the money is easy to take. There are also difficult kind of money to take. The difficult kind of money would be if this one came down straight down like this, right, and then it shot up straight up like that. This would be a little bit trickier to take unless you're familiar with how to do intraday trading. That's when you can, it's a sharp move down and a sharp move up. Because this may not happen. All right, this downside may not happen. It's actually a sharp move. So it's more like a 1 or 2 very sharp and then a move up. So that move can happen as well. But sometimes I don't want to complicate things because I know it sounds complicated. So I just point out what is the easy move, right? The one that if it happens, you should be able to take some money out of it. And the easy move would be something like that. That would be the easy move up. You're supposed to take something like this one, if it happens that way. All right. So the easy stuff, the easy prey to look out for, right? The mango is ripe. It's turned from green to yellow, and that would be the easy money. Right, the difficult money, it's just, if it doesn't happen, it doesn't happen, right? Okay. Let me think. Another thing that could be, some of you might say, why not like this? 1, 2, 3. It's possible, but then that's the easy stuff. Also, that's the easy stuff which can often go wrong because stop loss is usually depends on how the person enters the trade. You see, this move here is this move can get quite complex, so you need to know how to intraday trade this again. All right, it's important to learn how to intraday trade that stuff down. Right, but I think that at this point in time, this move looks good, you see. So one side is going to work out. Now, if this one side happens to not do this stuff, let's say it does not do that, right? Instead, what it does is that it just from here it moves out like that. Well, then of course you're looking for the sell. It's going to around this level, then you got to exit because then that could happen. So you're looking for this move down and then that move up, basically. Okay, and I'm back. Sorry, I had to look at something, but I'm back now. So yeah, coming to the dollar cat. Um, okay. Sometimes when I pause for a while and I come back, I have to rethink what exactly I wanted to say. Okay. Well, you have a bit of downside on dollar cat here. You do have that. It is making lower lows. So actually, the question is this going to is this that somebody say, hey, is this going to go up? Actually, I think that the dollar cat kind of seems downside. So I'm actually thinking of DEX weakness. That means the pound dollar, the Kiwi dollar, Aussie dollar supposed to go up. The dollar cat supposed to come down. So that's my bias for the dollar. Right, the dollar is supposed to weaken. See, I have actually all this drawn down. So this did not actually go down here, but just because it pushes up, remember, just because it pushes up like this doesn't mean that it's going to continue. Always remember that last push. Always remember stuff like this. You see, the last push is where a lot of people will get caught. Right, the last push is where people get caught. So this can be a lot of money. This can be a very big loss, and when this continues up, people who are here will basically have their accounts burned, basically. So since I'm looking for pound dollar to the upside, I'm looking for the dollar cat to fall. I'm looking for the DEX. I'm looking for weakness on the DEX as well, right? So basically, this push. Basically, when I drew this, I was looking for this to actually go up and then drop like this. But the drop actually came up higher, which is still a drop anyway. The question is, the actual move I'm looking for is a drop all the way even to clear out these lows here. So these lows, I'm looking to clear all those lows. So the question is now, it's a question of timing on where to actually take a short. You see, on to expect weakness on the dollar. There's so much dollar weakness coming up. I think I'm going to make a lot of money next week, to be honest. Yeah. So dollar weakness, look out for it. Dollar weakness will push up the pound dollar as well. And all these moves down that you think is going to go down, even if it comes to here, well, there's going to be a hell of a lot of divergence, there's really divergence here. But I'm not looking for that to go break this low. Even if it does, if it shoots up, it will shoot up in a very, very powerful manner. This move is still good to take. You must take this buy. At least that's what I'll be looking out for. Anything that looks like it's going up, I see structure that's going up. Like all this structure, you see, things that are kind of easy to see. These are easy to see, right? The stuff that's tough to see is probably this one. It's so sharp. This one, so people might be thinking of that actually. But in actual fact, the whole thing was still actually down. So this is a bit tougher. But if you're looking for something easy, then the easy stuff would be something like this one. See that? So you're looking for the easy stuff basically to take the buy. So if you can see the easy stuff, you need to buy it. Because when the going gets tough, then that's where we may not make any money. So when the going is easy, you should be able to make this money, right? But of course, remember that at some point the party is going to end, right? So if you didn't take the profit, then of course you will have been stopped out, basically. So at some point the party is going to fail. The question is, did you manage to take enough money before the party ended? So let's say price actually went down this way. At some point, it will stop going down. At some point this will stop going down. So the idea is, did you make, and then suddenly you try again, but the last minute you lost that, but you make 4 or 5 times, but you took that one loss, and that's perfectly fine as well. Just like boxing, you don't expect to always hit your opponent. The opponent's going to punch you a few times. So long as you rack up more points against the other guy, you still come out on top in the end. So that's a lot like what trading is, right? You try to win, score as much points as we possibly can, right? So that's what it means to trade a trend. You trade a trend, you get to make more, you get to make money most of the time, and it's very important psychologically to be able to do that, right? Okay, dollar cat. So dollar weakness, basically. maybe we also, I think one thing popular is also, there's some things in my circles, right, that people are kind of like discussing certain pairs, and then I don't really want to be involved in their arguments. I can understand why people look at things in a certain way, but if I could just make one small comment on the euro pound, is this going up or is it going down? At this point, it's kind of 50-50, but if I had to pick a direction, if I had to pick a direction, it depends on what this piece actually does. If it does something like this, of course, you are looking for the upside, for one more up, basically. How high this can go? Well, if it goes, it can go up all the way to this level. This level over here. How is it? This level. These are all good levels to actually go for, you know, because these levels are all stacked. You see, these are all stacked. They are all stacked here like this way. They are stacked this way, all the way to this level here. So once I clear out everything, you clear everything like so. This whole thing is like a how to say price action has a high chance of cutting through this entire price level over here, right? If it starts to show strength to the upside, but if you don't get something that suggests upside, right, and it starts to look the other way, sometimes the easy stuff would be like this. It just looks easy, right? Something that looks easy. You see this? Something that looks easy here. Then it breaks and then it goes. See, or even if it breaks, it pulls back. This is also a good sell. Both of them are good sells. So it really depends on what you get. Which way does the if the structure ends up looking like this, then of course you got to sell that down for sure. It's going to make one push down, right? So it really depends on what develops. I think there was some unhappiness about this price, about this movement. What's that? Let me some sell over here was okay. I understand that. That's not really the best sell. A better sell would be something like right now over here. This one over here. This is a better sell. But this sell is not really the correct sell, especially not here. Unfortunately, okay, because that's because there was strength right there. You see, there was strength right here. This push is quite high. Even if it didn't go so high, you're going to expect some kind of reaction right there, right? Some reaction. So basically, what I'm trying to say is that there would, whatever this push up, it could have been this push up, or it could have been a push that looked like this only. But whatever it was, this push that happens right here at this level over here, it's a reaction, and selling right there is not really a good breakout, basically. All right, because you're shorting right, you're shorting right at where there was previous pressure upwards, basically. All right, so what would be a better sell? I would say if this one had come here like that, price had done this, it touched this level, but it did not do that. Instead, it did sideways. And if this one broke, then this is the correct sell. This is the correct sell for the down, basically. Right. So you don't sell based off. You don't take a breakout from here. You take a breakout only when it hit a level and it could not go up. It did not do this and it did that instead. That's where you take the sell. That makes sense. Okay. So take note. So the same philosophy. If you do that, you can take the sell. Now there are of course more difficult structures. There are of course more difficult stuff, like for example, difficult stuff like this one. Let's say it does not do something like this. It does something more difficult like this. Straight up. And then maybe it does something like this. Something really weird. Can that happen? Yeah, it can. So this is the kind of the weird stuff as well. Right? Now, but this is not something that I want to talk about because that requires a lot more chart time actually. You know? But what I wanted to highlight is the easy stuff first, because if you can make money on the easy stuff, then we can look at the more difficult stuff then. So the easy stuff would be, basically, if it does this, like here, these are all cells. See? So if it does stuff like this, and it breaks, these are all cells. So you're basically just looking for the next piece down, basically, right? The next piece. Okay. So right now, any cells on the euro pound, you do need this confirmation because both sides are possible. This can also shoot up. If it does this, remember, it can also shoot up. In the worst case, it shoot up to there, and it breaks past this, and it breaks past this level because there are stops up here for sure. And then if it stops there, people start to buy from there. Then guess what? Suddenly, wow! Some people put the stop here. This is a previous low, and they take the maximum loss basically, so they lose. Right? So you just need the confirmation right there before they even decide what to do. It's for the euro pound. There's no point in because if you draw this and draw this, both sides are possible. So you need to know how to intraday trade this in order to manage the risk. Basically. Okay. Let's go look at our favorite. We look at some gold and some oil maybe. Let's go look at some gold. Let's see what gold is doing so far. So gold has kind of stalled at 1554. All right. So remember, we said that even if you think that the price action is going to hit somewhere here, 1600, people say, oh, it's going to hit 1600, but hey, you never know, 1600 is somewhere here. See? But you can always do a bigger move before it starts to go up. Bigger move sideways first. So let's see what this has done. Huh? 1, 2, 3, 4, 5. Possible 5-way structure. This is going to be something like if this goes up and breaks that, right, it's going to be almost, we call it a leading diagonal or Elliott wave, 1, 2, 3, 4, 5 to the upside. Anyway, it's a 5-wave. It's a very good structure to the upside that suggests more upside. So basically, if it does something like this, right, what you want to see is you want this to go up. There will always be an easy trade, there will be a difficult trade, right? In this case, the easy trade will be up. This will be the easy trade. And it's good if it goes up. Why? Because once it goes up like this, you can expect, once this is done, you can expect some kind of sideways structure. So once this is done, it hits this. Depends on what it pierces. I think it's going to, depends on how far it pierces, you see, because all these consolidation levels, it's going to be, these are all stacked, you see. It's all stacked right there. They're all stacked. Depends on what it pierces and how far it goes. But basically, what you want to see is if you see it pierce past, the move that you're looking for next, right, is going to be something that's downwards. That's the move that you want. So basically, this will be an easy trade. That will be an easy trade. These two will be the easy trades to take, right? If you're able to see them. The third easy move would be if this one breaks. This one, if it does something like this. This will be, let me see, how should I say this? Not the easiest, because there's always this chance that once it goes up here, it could immediately just reverse like this, giving you that typical head and shoulder pattern that, that people are familiar with, right? Now, something like this. Sorry, I don't know whether I drew that nicely enough. Nice enough. So this is a shoulder. This is a shoulder. So this is a shoulder as well, right? Oh, it's kind of gross the way I drew it. Okay, so but anyway, this is a shoulder on this side, a shoulder on this side, and then this move is coming down. So basically, after this has happened, you're looking for some kind of reversal. where, you know, this can hit anywhere around, we hit anywhere around the 382. Basically, you're looking for that. So this move up will be an easy trade. Let me see. This will be an easy trade. This move down will be an easy trade. And once this is done, this move up will be the easy trade. The stuff that you don't want to trade will be the stuff that's consolidating here. All right. This is the difficult stuff. Once it breaks, you don't want to get in anymore. Okay. The move that you want to take is before it breaks. Once it breaks, don't trade anymore. Basically, people usually trade when they see it break. When they see this break, then they enter. But that's when it pulls back, you see. So what I'm trying to say is if you try to take trades like this, only take it when it's going to go. Once it's finished the move, you're supposed to get out. Then after that, once it's done the sideways, you take again. So you take this one, try to take this one, and the move down is also a good thing. Good trade to take. This one, this one, this one. So if you place out the way that we are familiar with, you're supposed to make, that's the money you're supposed to make. So let me just say it again. This move is good to take. If it does a sideways, this move is one more move. You're supposed to get out. You hope that happens. You hope that happens and you want to take this one. So 1, a 2, and then a 3. All right. So once that's finished, you hope that you get a move like that. You hope to get this one as well. And this one. 1, 2, 3, 4. All right. The moves that we hope will happen. All right. Something like this, like stuff like that, you see, when you have stuff like that, and then when it breaks, you see, when this structure is broken, here, let's say you got this structure here. That's why I said you don't want to get in here. You want to get in when this is what you recognize, the sideways, and you think this is going to go up to break this top. So likewise, if this does something sideways, like see this sideways stuff, you recognize something here. This is the move that you want. But once it breaks, once you get the move, once you get with this move, will be this move, right? This move here, okay? Once you get it, you don't want to buy it here. You don't want to buy this because it's usually too late. This is where Wall Street Journal or, I don't know, Singapore Business Times will report, oh, gold made a sharp move to the top. But it already happened yesterday. So basically, we already made this money. And then the next day, news comes out to say that something happened to the dollar. Dollar weakened, that's why gold shot up, right? But it's too late already. By the time you buy here, then this happens, and this happens. So I'm looking to buy it. The news reports that gold shot up. I'm looking to sell. News report that gold came down. And by the time, if you follow the news, you're always one step behind because when news reports that gold fell, guess what? When it reports that gold fell, guess what? It shoots up again. Then news reports that it shot up, then guess what? It shoots down again. So if you follow news, you're basically fucked. That's a main thing. Sorry I had to use that word, but sometimes that is what people need to hear in order to sink in your head. You're here to trade. You're a gunslinger. It's all about playing dirty, man. It's all about playing dirty, you know? It's a very dirty game. So let's go. Go for you, okay? So let's go look at the last piece. Should I look at silver? I don't know. I go look at let's look at SPX. SPX. Interesting stuff, SPX. This fall came down pretty deep. This one came down pretty deep. So at this point in time, it's still a sell. You're still looking for movement to the downside. Although this move itself is fairly tricky, though. This move itself is fairly tricky. If what I would think this could do is something like this. This kind of move kind of makes sense. Something like this, because then if it came here and it went sideways, this is something that's very premature. But what would up the bias to downside would be something like this one at this moment in time, right? But we cannot neglect this look over here. Hold on, let me just. This look over here is also quite dangerous. Let me just highlight that. What would make a trade safe would be, what I was hoping for would be something like this one over here. If this one does not break, if this one does not do this, right, but instead it does not do this, and instead it shoots up from here. From here, it does this, and then it shoots up. This is what I actually want. This is what you actually want, all right? Because if it does this, that means, and it starts to flatten out here, this is actually a good sell. So this is better than this, okay? This, people who sell this thinking that they're going to get that, when they do not get that and they get sold off for break even, they may not know how to get in on this one, because now you broke the top. If you broke the top and you close above, what's in their mind now? The mind is that this is supposed to, it breaks the top, it's supposed to continue the upside, right? It breaks the top, close above, it's supposed to continue up. So it's not really true, all right? So even if it breaks the top and then, you know, you get stuff like, oh, flip here and then here, I don't know, it's supposed to go, but it's not true at all right? So what I'm trying to say is, after it breaks this top, you should be able to study or see what this structure actually is, but you're still looking, this move is the fast one, right? So you should look for that sell. Now, what if this move doesn't happen the way that we want? So let's just say, for argument's sake, right, let's say this move goes up, then you get something like this. And then this one, instead of falling straight down, it comes down like this. I'm trying to draw the difficult stuff that makes people lose money. Yeah, something like this. It goes something like that, and then it came down like this. Suddenly it shot up like this and went down sideways. Pop like this. You need to get out of the sell, basically, because you know why? Because this type of structure, this type of move, is supported by this. Always remember, if this move is going to go up, it's being supported by a bigger, stronger push on the left side. You have to know that this is uptrend. So you don't want to get caught basically shorting a move while it's doing that. You know, you don't want to get caught by the move while this is a 1, this is 2, and then it's 3 up, and then suddenly you're looking for the sell. Basically, you're looking for this move down, but actually that actually happened. That's why in trading, right, I think a bias is important, but in many instances, the bias is not really it's not really accurate. You know, certain bias, like for example, this is a very good bias. This would have been a good bias. A bias like that, usually you're looking for the sell. This move is like a very good bias for the downside, right? But in certain instances, the bias is really not there. It's 50-50. And that's when we have to go to the lower time frame to check which side we think it's going to go. Okay? So, but what I'm trying to do now is to highlight where the swings can actually happen, basically. Right? Where the swings can actually happen. So let's say we're looking at this move. So this move, since the bias is kind of funky for now, okay. So let's say we go to a lower time frame. All right. So again, what you're looking for, this is kind of, you see, it's all down. Basically, it's downside. See, it's picking all the lower lows. So you get something here that stops there and makes it kind of head and shoulder pattern again. Then of course you're going to the downside again, right? And of course, what you hope for is to clear this bottom at least. But having said that, life can always be not so easy. You must also know it can also end up like this, pop here, and then what? You can still shoot up. And then on hindsight, it would look like it did that. You see? That's also possible. So it's about taking a lot of little bits and pieces out of the market and being know how to scalp on the lower time frame. Yeah. So that will be the S&P. What else? Huh? Okay. Now, can this be also a single piece? And then this, and this is doing exactly what I said there. And then down, pop here, suddenly it goes sideways. If it does this, then you're looking for something like that. So whatever I'm expecting depends on the structure, depends on the time action, and depends on the price action, basically. Right. See all these stacked orders right there. So this all stacked right here. You just see stacked orders. Yeah, so you clear them all. The minute it appears, it would go straight through. You go straight through to the next supply zone, basically. Scary, right? Right to the pit too. So at this point in time, you're waiting to see what develops further. This is just one sharp push up. You have to see some kind of sideways, decide what to do next. Okay. And then let's go and look at the oil, everyone's favorite. So if you're oil trader, let's see. Justin is not pushing up his Tron, huh? He needs to add some value to Tron. It's the bottom for too long. What is this guy doing? Let me see. Is this at the low? That is lower. 1, 2, 3. 1. Oil looks. It looks like a sell. It looks like a sell. This looks more like one piece. This looks like one piece up like that. So you do anything like that, what are you looking for? You're looking for a down for sure. Yeah. See that? So you're looking for basically that's what you're looking for. This is the easy stuff, man. This is good. This is the easy stuff. So what is BMW money? This is the BMW money. If it does that, if it does this is the money that you go and spend $10,000 at a club, or $3,000 buying some, pay for some beautiful hot girl to be with you, right? This is that money, right? What would make it tricky? Let's talk about what makes it difficult. What would make it difficult would be, let's say, this would make it difficult. This is a difficult money right here, like so. So now you're going to have a dilemma. The dilemma is you're going to be afraid of this. You're going to be afraid of, because this move here, you're going to be afraid of this move down here. So this is the dilemma. This is difficult trading, right? With life, they want to make it difficult. So this move here would not be the easiest to take one, because if, let's say, you took the buy, you have to be prepared that this move could happen. You see? So you make small sideways, that's even better. Then you're looking for more upside, hopefully to break this top. So a sideways would give you a good risk reward for the upside, basically. It's like you mentioned you're playing poker. First you got a king pair. Good. It's good to have king pair, but if let's say this is like having a king pair, but if it goes up and it goes sideways again, now you have 3 of a kind, right? So the more sideways you get, now you have 4 of a kind, right? So the more sideways you get, the better it is to go to the upside. Basically, it's basically what you want. These are like order swaps. People are getting stopped out in order for price action to go in a particular direction. Okay. Yeah. So anyway, for now, the trade that you're looking for right now is still a strong push. Is you want this to go up like this, and then you want it to come back down. And then if you take this buy, it's because you're looking for a correction. There is potential a correction of this wave down. When you're trading this, you're waiting for this push up to correct, so they can take this push up, and then you're looking for this push to end, and then for this move to go down, because that relates to this move. So this push goes up, and then this push goes down. And if you don't get this push, if you don't find that confirmation down, then of course this can also go up like this. Because why? This can be that. This can be a 1. This can be a 2, and then this can be a 3, and then this is something sharp move. This actually came to clear out the orders, the stops that are over here, and that's why this one went up to take profit over there. And once that's done, and you start to see power to the downside, then that's what you hope for. This is the one that you hope for. And then if this happens, then this is the easy money. Although I have to tell you that this is not so easy to take. Sometimes it comes on straight like this, and sometimes they can come down in a real funky manner as well. And of course, the worst case scenario, difficult trading, if this one happens to actually go up like that, and then you want to come down, you're hoping that can happen. But I will tell you now, it can also come down like this. Shit can happen. It does that. It goes up again. So trading is a lot about taking it to certain places, exiting the trade, and then re-entering it again later, because this is a daily time frame. So even if you and don't lose money, but understand that if this is the move that you're looking for, and this came down here, you don't know how to take off profit. It goes up like this. Guess what? The 20K profit became McDonald's income. Because you were thinking, oh, impulse crash, impulse. But no, this was actually that. And then after that, it flipped up. So you're not making any money. So know how to exit trades. Take off some from the table. It's not right to say that when you're doing higher time swing trading, you cannot always say, this is my risk, this is my reward. You see? Let's say this is here. Let's say you entered somewhere here. No, you entered somewhere here. You entered somewhere at the top here, right? The price action didn't come all the way down. It came only to here before it flipped up, right? So when it comes to here, you see stuff that you don't like, you need to know how to take off some, because this move may never happen. The bias was to the downside, yes, but this, you got some, but you never reached the end. Instead, it flipped up. So, but now 1 week has passed, 2 weeks has passed, 3 weeks has passed. You cannot lose that amount of time and have nothing to show for, you see. On a very low time frames, like if you're scalping 1 minute, 5 minutes, time frames, then yeah, you can go for the risk reward does make sense, right? But not on a daily time frame. So your risk management needs to change, right? This is a very important tip. I hope it makes sense. Okay. We talk about oil. There's so much to say, actually, so much stuff to talk about, but I guess I will just stop here. And then as I've been thinking of doing more news type of news and Forex discussions. So I just want to see how this plays out, whether it adds value to anybody. How to actually trade using the news. There are people who scalp that actually use news not to tell them when to get out. But if you actually understand how swing trading is done, news is where the BMW money is made. You just put, instead of putting 10 lots to make 10 pips, 10 lots with 10 pips, you can put 2 lots, but you get more pips from the market. So, being versatile in your trading style, it's a very good thing. It's like, instead of saying that you just know how to box, but you could box and kick even better. You can box, kick, and grapple even better, right? So be more versatile in the market. Yeah. Is there anything else I want to say? That's one thing I want to say, Cat Yen, right? Yeah, so this is the one. It's what I have over here. What would be the worst case scenario, I think, for Cat Yen would be if this is to come break the bottom. Because I think there's talk about the upside, right? But again, as I always stress, this may not always happen, okay? So you need to be able to see both sides. So it's not about looking at the bigger picture. That means if this is supposed to be your bigger picture, but you need to understand that this does not always happen. That this can happen as well. And then it goes up, and then it crawls long way before it actually spins up like that. This will sometimes look like it's supposed to go up, but it does not always happen, especially on a larger time frame. Like euro dollar is one very good example, right? But before I go euro dollar, you just understand that moves up here, right? They need some kind of confirmation, right? Now just because this looks sideways, it's not sideways. It's not. You don't know whether this is going to break out yet, right? On this time frame, on the daily, this is like weeks, 2-3 weeks of this going sideways before it drops. Does that mean that this is going to go down here? Right? Well, you need to go and trade on the lower time frame to find out what is actually going on here in this structure. Is it going to do something that confirms your downside, or is this actually going to go up break? Right? Right now, this piece itself, it's not the this piece itself can be quite tricky, I would say. It can be quite tricky at this moment. What will make easy trading is for this to actually come break this low. You want that, because then this will be complete for 1, 2, and 3. And then, of course, if it does that and does this, even better, because then it gives you something familiar, head and shoulders pattern again. That's what people are familiar with. So this becomes easy trading over here. But right now over here, there is a way to trade it, but it involves time factor trading theory to actually know how to navigate the candles inside here, because it's a daily time frame. Right? You need to know how to navigate the stuff. The stuff that I'm speaking here is generally about swings, but swings itself are often 50-50, right? And to put the edge in your favor, make it like 60-40, 40% you're wrong, 60% you're right, right? So 80% that you're right requires study on the lower time frame, which is often what the hell is going on within this candle itself. Okay, so that's very important. So far on Google, I don't find much information on it because I don't think it's shared much, because people who are familiar with that probably don't want to share it anyway, right? But this stuff that I'm sharing about swings, it's kind of good, but it's not. It's just tips, You probably already know I'm quite good at this stuff, so I don't mind sharing a few tips. But so at the same time, I want people to understand that there's still a lot more to it. So try to use whatever information I have and whatever information that you're able to get from Amazon or somewhere else, and try to put it all together into a trading system that's good for you. Okay. Yeah, get as much information as you can from different sources is always good. Some might be wrong, but without sufficient knowledge, it's hard to tell what is wrong or what is right anyway. So you just have to get a lot of knowledge at the start, right? But probably after a year, you're going to come back to what I said. Say, oh, so that's what Sherman was saying. Now I understand whatever the hell Sherman was saying 1 year ago. It happens. I get the kind of messages. People had no clue what I was saying until a year later. Okay, so basically what you're looking for the upside to start, right? The upside to start. Let me just go to weekly, just see what's going on here. Yeah. Okay, so basically what you want for this is you want this to go up. You want this to go up. You want this to actually come out like that. And then this would actually make a very good move to the upside. I actually like it here to the upside, to be honest. This looks kind of weak. But don't forget, what looks kind of weak to the downside can actually become strong to the downside. But so, like for example, in this case, let's say this was to actually really come here and drop to this level, it pulls back, then this is likely going to drop to there as well. You see? Likely going to drop to there as well. And if this one drops to around here, and then suddenly it shoots up like that, clear out everybody, like so, this can still drop to this level here. It's like it's almost at the edge. It's almost at the edge of this price level, 75.6. Was it 75.742? And you think it's going to get there, but you don't get there. Instead, it shoots up, clears everybody, and then it drops down. Then you're thinking yourself, why is the market hunting my stops? Because that's what it does. People need to be stopped out, and so that someone can make their profits. And I'm looking out for all this type of swings, because this type of swings is what makes a fucking load of money. Those times when your accounts, you lose your 20, 30, 40K, this is what happens. I'm telling you, this is what happens. Right? So, yeah. So when it does this, this then becomes a very good trade to the upside after people have been screwed. All right. So you just look out for swings like this and know how to know what kind of swings that can know what kind of swings can happen and know how to get into them or to avoid them. You know, when they're ambiguous. You know, because once the charts are clear, once I draw clear with the lines, it's hard to tell what's going to happen. You look at this and you're just thinking it's going to do this. I tell you, not necessarily. Not necessarily. It's just one of many moves, right? You need some confirmation inside what's going to happen. And the unfortunate thing, even if it does this here, guess what? People get stopped out when they think that they are oh yeah, I'm gonna make money, but then guess what? It came all the way back down. So you need to know that can happen too. All right. Instead of saying on hindsight that happened, you need to know that can happen as well. Okay. But ultimately, do I like this? Do I like this move? 1, 2, 3. Yes, I do like it. I think there's a lot of potential. So any buy at this low, looking for the buy is a very good idea. It's a good idea. Let me see, huh? Well, this is a bit scary too. Yeah, you should look for something like this, and then see how high it goes. See how high it goes. Okay. But you got to worry about this guy as well. This is also something dangerous. You don't want it to be something like this, 1, 2, 3 down. Very possible too. But this move here would be a good one, right here at this low. You should look for price action to get in, okay, to confirm the direction of the swing. Let me see. Yeah, I guess I'll end it. I'll just end it now. And trade safe. Okay, I'll see you.